Okay, dear students, let's start a very first live revision class of FR. The session is September 2026, and in today's revision class, we'll be revising IES 33. All the questions I've taken from Study Hub, and let me tell you one thing. In FR, you people will be getting the revision of entire course, but entire course revision you will be getting through questions. And majority of the questions we are going to select from Study Hub, and the second we'll be selecting the question from the past papers. One more thing, all the enrolled students, they will not only be getting the pre-recorded lectures, you will also get the crash course, and crash course where within 9 hours we have completed the entire FR, and that crash course is already uploaded on the portal. But obviously you will only get the maximum benefit once you have seen the entire course. So let's start from a very first question. What is the theoretical X right price? First of all, student, TRP. Theoretical X right price means share price after the right issue. Share price after right issue. So theoretical X right price means share price after right issue. Second, you should know one more thing. Share price before right issue will always be higher than theoretical X right price. Share price before right will always be higher than theoretical X right price. Okay. Now let's read the question. A company makes a 2-for-3 right issue. Company makes 2 right issue against 3 shares. Right issue price is $2. Come right price means share price before right. Come right price means share price before right. Before right issue. Come right price means share price before right issue. So the share price before right is $4. Right issue price is $2. Number of rights are 2 against 3. So all you need is just make 3 columns. Shares, values, and total value. Company is going to issue, or company makes a right issue, 2 right against 3 shares. That is a ratio. Share price before right is $4. Right issue price is 2. So here becomes 12. Yes, 12 and 4, 16. So we can say that the value of 5 shares, the total value of 5 shares is 16. If the total value of 5 share is 16, so very easily we can calculate the value of 1 share, and that value is going to be theoretical X right price. TRP. Simply 16 divided by 5. Let me use the calculator. 16 divided by 5. Students, I'm getting 3.2. So basically 5 shares total value is 16. So value of 1 share is 3.2. So choice is delta. D is the right answer. So I would say pretty easy, not difficult at all. Not difficult at all. Just a minute. ABC company makes 1-for-4 right issue. The right issue price is $5. Share price before right is 7. Required is theoretical X right price. I want every one of you to calculate theoretical X right price. ABC company makes 1-for-4 right issue. 1 right issue against 4 shares. 1 right issue against 4 shares. Right issue price is $5 and the share price before right is $7. Repeat, company is issuing here one right against 4 shares. Right issue price is $5. Kindly, can you please mute the mic? Is it possible? Thank you. Now, simply shares, values, and total value. Company is issuing one right against 4 shares. Share price before right is 7. Right price is 5. So 7 multiplied by 5, multiplied by 4, I'm getting 28. So we can say that 5 shares total value is 33. If 5 shares total value is 33, then what will be the value of 1 share? Critical X right price. Students, I'm getting 6.6. So theoretical X right price means share price after the right issue. Share price after the right issue is going to be 6.6. Is that clear? Kindly write in the chat box. And let me tell you one thing. First, you are writing right issue and then you are writing existing shares. It makes no difference at all. Main thing is you should be able to calculate theoretical X right price. Okay. Now kindly come here. Let's see this. In accordance with IAS 33, EPS, what is Chartwell's basic EPS for the year ended 31st March X3 to the nearest cents? Okay. Answer in dollar in the answer box. Okay. Okay. Chartwell is an issue. 1,20,000 equity share capital and par value is $0.5. 10,000 6% preference shares. And each preference share is having a, let's say, par value of $3. I have one question, students. My first question is, whenever you are solving a question on IAS 33, if your examiner writes preference shares, preference, does not mention anything, just writes preference shares, like in this question, it is just saying preference shares. My question is, will you treat these preference shares as redeemable preference shares or irredeemable? Whenever nothing is mentioned, then my question is, will you consider given preference shares as redeemable or irredeemable? There is a difference, okay? When you say redeemable preference shares are financial liabilities. Irredeemable preference shares, they are equity instrument. And let me tell you, if nothing is mentioned, then given preference shares, we always assume that given preference shares are irredeemable. Repeat, whenever preference shares are given in the question, but examiner does not mention either redeemable or irredeemable, then you have to treat given preference shares as irredeemable. Irredeemable preference shares, they are equity, and obviously on equity we give actually dividend. Okay. Extract from the financial statement for the year ended 31st March X3 are shown below. Profit before financing and income tax is 5,28,934. Interest expense. Then they have given us income tax, preference dividend. They have given us ordinary dividend as well. First of all, student, come here. If you recall the formula of earning per share, first we need profit after tax. We need profit after tax. From the profit after tax, we only deduct preference dividend. While calculating EPS, we do not deduct ordinary dividend. Repeat, while calculating EPS, we do not deduct ordinary dividend, we deduct preference dividend. Yes, if we are solving a question for the group, then we do deduct NCI as well. But most of the time in FR, you will see that profit after tax minus preference dividend divided by weighted average ordinary shares. The main concept is according the question which we are facing in this question. First, we need profit after tax, and from profit after tax, we will deduct preference dividend. We are not supposed to deduct ordinary dividend. Okay. Now look at this. Profit before financing and income tax. This is logically a profit before interest and tax. From this profit before financing and income tax, we will deduct interest as well as tax. Now listen, when we are going to deduct interest and income tax, logically, as soon as you deduct interest and income tax, whatever comes, it will be profit after tax. Then from profit after tax, we will also deduct preference dividend for the sake of calculating EPS. But we do not deduct ordinary dividend when we are calculating EPS. So it means that earning per share is equal to 5,28,000, 5,28,934, if I'm not wrong, minus the interest as well, 6,578, minus income tax, 1,25,860, minus preference dividend, 1,800. Divided by number of shares, nothing is mentioned, then given shares are treated as weighted average ordinary shares, because examiner has not given us any information in this question like company has issued during their any XYZ number of shares. It means they did not issue any ordinary shares during their. We have got 1,20,000. This 1,20,000 is a share capital. Par value is 50 cents. Share capital divided by par value will give us number of shares. Share capital is 1,20,000. Par value 50 cents means $0.5. So share capital divided by par value will give us number of shares. So 1,20,000 divided by 0.5. Students, I am getting 2,40,000 shares. So here we will divide this by 2,40,000. So let's see what are we getting. 5,28,934 minus 6,578 minus 1,25,860 minus 1,800 divided by 2,40,000. Students, I am getting 1.644. I hope it is clear to everyone. Do we have any options? It's not about option. It's they have given us a box. In the box, we have to write this. So the answer is 1.644. Is that clear, students? Kindly reply in the chat box, please. Do not open the mic, otherwise, obviously, then recording will not be beneficial for the other students. I strongly believe this should be clear to everyone. Let's see the chat box. So far, there's nothing in the chat box. Students are waiting. Is that clear? Kindly reply in the chat box so that we can move on the next question. Okay, finally, there's one answer clear. Thank you. Thank you. More answers are coming. Thank you. Student, this question looks very small to me. In accordance with IAS 33 EPS, what is Dale's basic EPS? In the year to 30th November, retained profit of Dale was, I believe, 3.64 million. This was after paying dividend, ordinary, preference, and they just need EPS. Student, I'm giving every one of you only 2 minutes. I need the answer within 2 minutes. Kindly attempt this. I want every one of you to attempt this. You have 2 minutes. Please attempt. Students have started giving answer. Number one student is saying option D. Okay. Any other students? Okay, let's try. In the year ended 30th November, retained profit is 3.64 million. And this was after paying ordinary as well as preference dividend. Now listen to me carefully. Students, when we calculate EPS, then we do deduct preference dividend, but we do not deduct ordinary dividend. Here we have only one objection, that we cannot use 3.6405 million as it is for calculating EPS, because they have also deducted ordinary dividend. But for calculating EPS, we do not deduct ordinary dividend. So what to do? Simply, in this retained profit, which is not fit for EPS, which is fit as retained profit, but it is not fit, it is not acceptable for calculating EPS. We have to add back ordinary dividend only. They have deducted the preference as well, which is perfectly fine. But deducting ordinary dividend is not fine at all. So we have to add back ordinary dividend. Okay. It is $0.05 per share. And how many shares do we have? We have got 1.5 million shares. So 1.5 million into 0.05. Students, the amount of ordinary dividend I'm getting $75,000. What I did, I have taken 1.5 million shares multiplied by 0.05. So it is 75,000. So simply, while calculating EPS, 3640 500, we will add only ordinary dividend. Preference dividend is already deducted, so no need to do anything. Divided by number of shares, which are 1.5 million. So let's see, what are we getting? Which means I'm getting 2.477. If any one of us, or let's say you are solving an exam and you're not getting exact answer, then always go for the nearest one. So student, which one is the nearest one? Can I say delta? Delta is the nearest one. I think some of the students, they have answered the right choice. Okay. In accordance with IAS 33, what is EPIC's basic EPS? So student, I'm giving now 5 minutes. So kindly every one of you attempt this question. Give me EPS and you have 5 minutes. Kindly do attempt this question. Whenever you have been given a time to attempt the question, kindly do attempt the question. Because don't forget one thing, when you are attempting the question and let's say there's a possibility you might make mistake, that mistake is okay. But not attempting the question is the biggest mistake. So I would say save yourself from making a big mistake. So try to attempt the question. Even you make mistake, it's okay. But attempting the question is necessary. Let's see, some of the students, they have started sharing the results. Okay, they're asking the question, right? Let me zoom out a little bit. I hope now it is okay. Okay, okay. Now attempt, please. Okay, let's try together. Let's try together. Question number 4. In accordance with the IAS 33, we just need to calculate basic EPS of Apex. The financial statement of Apex showed that, wow, consolidated retained earnings had increased in the year by 6,89,425. These are consolidated retained earnings increased by 6,89,424. The following items were presented by Apex in either the statement of profit and loss or in the statement of change in equity. Okay. Interest expense, of course, P&L item. Taxation is a P&L item. Profit attributable to NCI. Logically, students, profit attributable to NCI is already deducted, because kindly read the first sentence, what is written, first line. The financial statement of Apex showed the consolidated retained earnings. Retained earnings. Actually, if we have consolidated profit after tax, then we are going to deduct preference dividend and we will also deduct NCI. But if I have been given a consolidated profit after tax, here categorically it is mentioned, it is consolidated retained earnings. So obviously NCI, technically NCI is already deducted. We don't need to deduct NCI anymore. Okay. Ordinary dividend. They have also deducted the ordinary dividend. Can I say deducting the ordinary dividend is incorrect? Everything is okay, but we have only one objection. The objection is while calculating EPS, we do deduct preference dividend. We do not deduct ordinary dividend. And let me repeat again for you. If you have been given a consolidated profit after tax, then we deduct preference dividend and we also deduct NCI, non-controlling interest. Here examiner has given us the group retained earnings, So you are not supposed to deduct the NCI value. But within that retained earning, group retained earning, which has increased during the year, we will only add back ordinary dividend. Because while calculating EPS, we do not deduct ordinary dividend. And amount of ordinary dividend is 65,000. So we'll add this 65 into the retained earning, which is 6 lakh. And kindly, we need the retained earning, increase in the retained earning of current year. They have not given us the total retained earning of the previous year and the current. We need current. So they have categorically written, if you read it, consolidated retained earning had increased in the year. So this is the rise in the current year. 6,89,424. Here comes the earning which we need for calculating profit, for calculating EPS. 65,000 plus 6,89,424. Students, I am getting 7,54,424. So here comes your basic EPS. Distributable earnings 7,54,424 divided by ordinary shares, weighted average ordinary shares. But in the question, we do not see any shares which they have issued during there. So simply we'll take, look at this. It is ordinary dividend. Try to understand. Is 0.10 per share. And this is the amount of ordinary dividend. Repeat, we need number of shares. How will you calculate? Ordinary dividend is 0.10 per share. And this is the total ordinary dividend. So total ordinary dividend divided by ordinary dividend per share will give us total number of shares. Total number of shares, I am getting 6,50,000. If you multiply 6,50,000 with dividend per share, which is 0.10, you will get 65,000. So this time, from the dividend amount, we have calculated number of shares. Most of the time, what happens? We normally take ordinary share capital and we divide ordinary share capital by par value to get number of shares. But here in this question, we have calculated number of shares, but by using the information of dividend. So kindly, you should be able to read the data properly. Ordinary dividend is 0.10 per share. It is the total dividend is 65,000. So if I divide total dividend by 0.10 dividend per share, it will give us total number of shares, which is 6,50,000. So let's see what is our EPS. Students, I am getting 1.16065 something. Again, if you do not get the exact answer, then always go for the closest one. Can I say closest one is the Charlie? Closest one is the Charlie. I hope it should be clear to everyone. Okay, now you should listen carefully. Number one, since it's a first class, so that is why I mentioned earlier at the start of the class also, it will not be a long class. Second, revision class will remain once in a week, but the duration of the class will definitely increase. Okay, it is going to be increased. There's no doubt about it. Plus, you will be getting a revision of the entire course, but the revision will be through questions. And most of the time, as I mentioned earlier also, we are going to take the questions from the study hub and the past papers. Okay. One more thing, if it is required, it happened in the previous session also. If it is required towards near to the exam, if it is required, then frequency of classes will also increase. I'm talking about live revision classes. But students, you should take live revision classes like a revision classes. You will be able to get more benefit from these live revision classes once you have covered that topic from the regular classes. So it is my humble request, always first cover the topic from the regular classes before attending this live revision class. In today's class, the topic was IS33. Still few area of IS33 is left, which we are going to cover in the next class. But from the next class onwards, you will see that in the same class, we are going to cover more than one IAS and IFRS. But obviously, the topics which we are going to discuss in each live revision class, at least 3 or maybe 4 days before the class, we are going to share those topics which are going to be discussed in the coming live revision class. So that is all about today's live revision class. Thank you very much that you people have taken out time for today's class. If there is anything, any suggestion you want to say, I'm available. One more thing, then I will stop the recording, which we did in the previous session. If you people want to do that, so I'm open for that also. What we did in the previous session, always towards the end of the class, I was asking questions on, of course, ISS, which we were discussing during our revision class, and the students, they were just answering by opening the mic. Okay. For example, like in EPS, I could ask, what is the formula of EPS? Another question could be, for example, what is the meaning of theoretical X-rate price? So things like that, or different concepts as well. So if you want to do the same practice with me, do let me know. Then from the coming class onwards, we will be following that practice also. Then towards the end of the class, I'll be asking few questions, and that's it. If you have anything else to say, ask, I'm available. Let me